Welcome to The Explainer. Today, we are diving deep into a single, absolutely wild day on the Indian stock market. A day where two massive, opposing forces went head to head in a fierce tug of war for one single, all important number that had the entire financial world holding its breath.
All right, before we jump in, just a quick heads up. This is purely for educational purposes. As you know, trading is serious business and comes with significant risks. So, this number right here, $24,980.65, this is where it all ended. This was the final closing price for India's Nifty 50 index on August 19th, 2025. But trust me, this is way more than just a number. It's the final score of an incredible day-long battle between pure hope and crippling fear. I'm not exaggerating when I say the market was literally a battlefield. You had this powerful, optimistic wave of domestic good news, trying to pull the market up, higher and higher, but pushing back against it with everything it had was a massive wall of global fear. And the prize they were all fighting over? That historic 25,000 mark.
Okay, so let's break this down. Let's look at the first side of this tug of war, the engine of pure domestic optimism that had so many investors feeling so incredibly bullish. All this positive energy was really being fired up by what you could call twin engines. First, you had all this buzz around a massive game-changing tax reform called GST 2.0. And second, a huge sovereign rating upgrade from S&P Global. We're talking the first in 18 years. That's basically a giant global stamp of approval on the country's financial health. So what's the big deal with this GST 2.0? Well, the idea was actually pretty simple, but its potential was enormous. The plan was to completely overhaul the tax system to make everyday stuff cheaper for you and me. The hope was that this would kickstart a massive wave of consumer spending. And the potential impact? Just staggering. Economists were predicting this single reform could pump up to 2.4 lakh crore rupees directly into the economy. That is a colossal amount of money. And the best part was, it was all homegrown optimism. And you know, this wasn't just some pie-in-the-sky idea. The big firms, the serious players, were taking this very seriously. You had firms like MK Global calling it a re-rating trigger. Now, that's just analyst speak for a fundamental game changer. An event so big it forces everyone to totally rethink what the market is actually worth. But for every action, there's always an equal and opposite reaction, right? So for all this amazing local optimism, you had this really formidable wall of global worry pushing back. Hard. And the biggest headwind by far was the escalating trade friction with the United States. The Trump administration had slapped tariffs of up to 50% on a whole bunch of Indian goods. This created some serious uncertainty, especially for any Indian company that relies on exporting to the US. And this table really shows you just how unique India's situation was on this day. Look at this. While the Nifty 50 was climbing, fighting its way up, other major markets in Asia and the US were either down or just completely flat. India was pretty much going it alone, trying to swim against a really negative global tide. So, we've set this stage, right? We have these two huge opposing forces. Now let's get down to the battleground itself and see how this whole conflict actually showed up in the hard data from the trading day. To really understand the fight, first you gotta know the fighters. On one team, you have the FIIs, the foreign institutional investors. Think of them as global money. And on the other team, you've got the DIIs, the domestic institutional investors. Let's just call them local money. And folks, this chart right here, this tells the entire story. This is the tug of war in one picture. The foreign investors, the global money, they were spooked. They were selling, pulling 634 crores out. But then, look at the local money. They came in with overwhelming force, pouring in over 2,261 crores. They didn't just absorb all the selling, they were hungry for more. And you could even see this fight happening at the level of individual types of stocks. Companies focused on Indian consumers, like in the auto sector, they rallied hard on the hopes of those GST tax cuts. But the sectors that were more exposed to global risks, like pharma companies dealing with US regulators, they actually went down. Investors were clearly and publicly picking sides.
So, after all of that pushing and pulling, all that buying and selling, what was the final verdict? Who actually won the day? Well, in the end, it was a stalemate, a really, really tense one. The bulls, they had just enough strength to briefly touch that 25,000 mark during the day, which was a huge psychological win. But they just couldn't hold that ground. The bears pushed back just hard enough to force a close right below the line. It proved that 25,000 was a truly formidable barrier. So this sets up two very clear, very different paths forward. The bull case is simple. The domestic story is just too strong, and eventually the market will smash right through that 25,000 wall. But the bear case? It says that if global fears get worse, or if there's any delay in those big reforms, all this optimism could just evaporate, triggering a really sharp sell-off. And that leaves us right back where we started, with the one question that matters. Will India's powerful domestic hope finally be enough to break through that huge, stubborn wall of global fear? I guess only time will tell.